Hi, this is Jerry. Today I want to talk about Saudi Arabia, which I visited many times. When it looks at the Middle East, it no longer stops at Dubai. Increasingly, the flight path for global investors bends toward Riyadh, Jeddah, NEOM, and the Red Sea coast. Saudi Arabia, once shorthand for oil, is recasting itself as one of the most aggressive investment destinations on the planet. This is not a vague narrative, it's visible in the numbers. While global foreign direct investment, FDI, has been drifting down for 2 consecutive years, Saudi Arabia has been swimming against the tide. UNCTAD's World Investment Report shows global FDI falling from 2022 onward. Yet Saudi net FDI inflows actually grew 21% in 2022 to around SAR 105 billion, even as the global figure contracted. Subsequent revisions and sector decompositions show a more nuanced picture. Revised data suggest inflows of about $27 billion in 2021, $33 billion in 2022, and $19 billion in 2023, with the earlier spike inflated by large Aramco pipeline stake sales to foreign consortia. Even after that adjustment, Saudi Arabia remains one of the top FDI destinations in the region, with 2024 inflows estimated around $31–32 billion, up roughly 24% year-on-year. The nearer-term trend is also telling. Net FDI in the first quarter of 2025 jumped 44% year-on-year to about SAR 22.2 billion, indicating that momentum is building rather than fading. Behind these numbers lies an explicit political promise. Under the National Investment Strategy, Saudi Arabia aims to raise annual net FDI to roughly $100 billion by 2030, lifting FDI to 5–6% of GDP. So what's driving this rush of money into the kingdom? And where are the real opportunities? Firstly, let's discuss why the money is flowing into Saudi Arabia. The starting point is Vision 2030, launched in 2016 by Crown Prince Mohammed bin Salman. The plan is blunt in its ambition: diversify the economy away from oil, build a vibrant private sector, and position Saudi Arabia as a global investment hub. Vision 2030 is more than a slogan. It is backed by the Public Investment Fund, PIF, with almost $1 trillion in assets under management, acting as both anchor investor and dealmaker. A national investment strategy targeting specific FDI and domestic investment ratios. A pipeline of giga-projects, NEOM, Red Sea Global, and others whose planned capital spending is estimated at close to $1 trillion over time. This framework gives investors clarity. Saudi Arabia is not simply open for business. It is structurally re-engineering itself around investment. Secondly, let's discuss its policy and regulatory reforms. To make that ambition investable, Riyadh has spent the last decade tearing up old rules and writing new ones. Foreign ownership rules have been liberalized in many sectors, allowing 100% foreign ownership in key areas where joint ventures were once mandatory. 2. The government has rolled out new commercial, bankruptcy, and companies laws, bringing the legal framework closer to international norms and improving investor protection. 3. Special Economic Zones, SEZs, and project-specific regulatory zones, e.g., NEOM, Red Sea Global, offer tailored tax, customs, and visa regimes, plus streamlined permits. 4. A new premium residency program has started granting long-term residency to foreign entrepreneurs and professionals, effectively lowering the friction cost of committing to the kingdom. For global capital used to legal uncertainty and bureaucratic drag in emerging markets, these reforms matter at least as much as headline returns. Next, let's look at the giga-projects in Vision 2030. If Vision 2030 is the strategy, the giga-projects are the theater. These include NEOM, a 26,500 km new future zone on the Red Sea, with sub-projects like The Line, Trojena, and Sindala designed around sustainability, advanced tech, and tourism. Red Sea Global and Amala, ultra-luxury tourism destinations positioned as eco-conscious rivals to the Maldives and Mediterranean resorts. Qiddiya, an entertainment, sports and culture hub outside Riyadh, now attracting partners like Six Flags and hosting mega stadium developments for the 2034 FIFA World Cup. These projects do more than consume capital. They create ecosystems, airports, roads, ports, utilities, real estate, digital infrastructure, each needing multinational expertise. They also tend to operate as special regulatory zones, making them especially investor-friendly. Undoubtedly, they come with risk. PIF recently wrote down around $8 billion on giga-project valuations amid delays and cost overruns. But even with that, the long-term commitment remains intact, and the pipeline is far larger than the write-downs. What's new pillars for Saudi Arabia? Saudi Arabia is consciously building new economic pillars alongside oil and petrochemicals, mining and critical minerals. The kingdom estimates its untapped mineral wealth at around $2.5 trillion and has earmarked $100 billion to develop the sector as a third pillar of the economy. Recent deals include over $9 billion in metals and mining investments with partners like Vedanta India and Zijin China. Renewables and clean energy. As electricity subsidies are phased down and tariffs rise, businesses are rapidly adopting solar PV and energy efficiency solutions. The state targets 50% renewable power by 2030 and net zero by 2060, driving demand for solar, storage, and grid solutions. Tourism, entertainment, and sports. Beyond religious tourism, the kingdom is pushing leisure tourism, theme parks, festivals, and mega sporting events. Investments range from golf resorts backed by high-profile foreign investors to theme parks like Six Flags, Qiddiya City, and even influencer-driven attractions such as Mr. Beast's Beastland in Riyadh. Taken together, these sectors explain why global investors suddenly find Saudi Arabia in their slide decks. The opportunity set is wide and still underpenetrated. So, where are the real business opportunities in Saudi Arabia? From a practical investor's standpoint, Saudi Arabia is open for business only matters if you can identify concrete plays. Based on my physical visits, following businesses are very promising. 1. Tourism and hospitality industry. Rooms, experiences, and ecosystems. Tourism is the front of house for Vision 2030. The goal is to attract 150 million visitors annually by 2030, up sharply from pre-vision levels. That implies massive demand for hotels and resorts, from mid-scale to ultra-luxury. PIF-owned Al Balad Development recently announced a $3.6 billion hospitality investment portfolio targeting thousands of hotel keys. A need for operators, asset managers, and branded residences, not just bricks and mortar. Opportunities for F&B brands, experienced designers, tour operators, wellness and medical tourism providers, and MICE, meetings, incentives, conferences, exhibitions, players. If Dubai is the finished product, Saudi is the construction site where early entrants can still shape and own a slice of the landscape. Construction, engineering, and project management. Giga-projects and industrial zones require master planners and engineering consultancies, EPC contractors, engineering, procurement, construction, specialists in project controls, claims, and delay management. These are not straightforward jobs. Desert environments, sustainability mandates, and tight delivery timelines mean complex risk profiles. But for firms with strong governance and balance sheets, fee pools and margins can be attractive, especially in niche areas like tunneling, coastal engineering, smart city infrastructure, and sustainable building systems. Mining and critical minerals value chain. The push to make mining the third pillar of the economy creates openings across the entire value chain. Exploration and geophysical services, drilling, equipment supply and mine development, downstream processing, ESG and environmental services, water management and tailings solutions. Saudi Arabia has been awarding new exploration licenses to both local and international companies, and signing multi-billion-dollar deals in copper, zinc, lithium, and rare earths. As I discussed in my previous videos, these minerals are very lucrative and desperately needed by many countries. Here, the kingdom's location between Europe, Asia, and Africa, plus access to cheap energy and new industrial ports, offers genuine competitive advantages for export-oriented operations. Renewables, energy services, and industrial decarbonization. As subsidies are phased out and large corporates chase global ESG targets, solar EPC firms, inverter and storage suppliers, and energy efficiency specialists are finding a growing market. Industrial decarbonization, waste, heat recovery, process optimization, electrification of heating, hydrogen pilots offers scope for engineering and technology companies. International investors can partner with local conglomerates to build renewable portfolios, green industrial zones, and data center plus solar combinations. Digital, AI, and smart city solutions. Projects such as NEOM are effectively greenfield cities designed from scratch around advanced mobility, logistics and port systems, urban tech, IoT, digital twins, predictive maintenance, AI-driven governance and citizen services, professional services, law, consulting, training, and healthcare. All of this investment needs structuring, documenting, auditing, and staffing. That creates resilient demand for legal and regulatory advisory, especially on project finance, joint ventures, M&A, and SAZ frameworks. Consulting and transaction services, from feasibility studies to PPP structuring. Education and training providers, focused on upskilling Saudi talent in engineering, hospitality, digital, and healthcare. Healthcare and life sciences, as new cities and tourism hubs demand hospitals, clinics, and wellness infrastructure. For professionals who, like you, can sit at the intersection of healthcare, law, and cross-border business, Saudi Arabia is not just a market, it's a multi-decade client pipeline. However, there are still many risks and tough realities you need to consider very cautiously. For all the enthusiasm, investors should not mistake ambition for guarantee. 1. FDI is still below target. Despite recent growth, inflows need to rise significantly to hit the $100 billion an annual goal by 2030. 2. Execution risk on giga-projects is real. Cost overruns, project delays, and scope changes have already forced value write-downs at PIF, especially around NEOM. 3. Regulatory learning curves persist. Although reforms are substantial, foreign investors still report friction around local partnerships, labor rules, and administrative processes. 4. The macro backdrop, oil prices, regional geopolitics, and fiscal balances remains a key variable. A sustained oil slump, for example, can tighten funding for state-backed projects even if the long-term vision is unchanged. Put differently, Saudi Arabia is transitioning from a hydrocarbon rentier model to an investment-driven one in real time. That journey is investable, but not linear. So why investors can't ignore Saudi Arabia? The global investment map is fragmenting. Western markets are mature and politically noisy. China is slowing and more complex to navigate, and many emerging markets lack either scale or governance. Against that backdrop, Saudi Arabia offers a distinctive combination. Scale, a G20 economy with huge domestic demand and regional reach. Capital, a sovereign fund willing to co-invest and de-risk early stages. Clarity of direction, Vision 2030 and the National Investment Strategy provide a long-term roadmap. Opportunities spread from mining and renewables to tourism, sports, logistics, healthcare, and advanced tech. For investors and entrepreneurs, the question is no longer, is Saudi Arabia investable? But rather, where in Saudi Arabia's transformation story do we fit, and how early do we want to be? Those who answer that question thoughtfully now may find that the real return on Saudi Arabia is not just financial, but strategic. A front row seat in one of the most consequential economic reinventions of the 21st century.